All right, fresh off the heels of another successful workshop, Alex-Deacon is now back in the studio, recording another episode of Alex-Deacon.
It's actually my office, but
we like to pretend. We like to pretend, yeah. Okay. Welcome back to Real Estate Investing with Alex-Deacon. I am not Alex, I am Adam. With me, as always, is the important one, Alex-Deacon, the Deacon of Real Estate. What's up, Alex?
Hey, buddy. How are you, sir?
I am pretty good today. Good friend I am today. I'm not your buddy, pal.
Good to see you.
Listen, so here today we're going to talk about because we get some listens from all over the country, all over the world, really. We wanted to talk about some out of state and out of market investing, the pros and cons of them. Alex, where would you like to begin with this topic?
Yeah, the reason I wanted to talk about this today is because I was on Bigger Pockets, and you get a lot of investors who want to come here and invest, and they're looking to. Just because it's affordable and you can buy stuff here that you can't even touch in other parts of the country, like San Francisco or Seattle or Los Angeles, where the price of a duplex there is 4 or 5 times the cost here. So I was posting on the forum, and I thought, well, that'd be a good topic for today. So that's what we're gonna chat on that a little bit. And because when I talk to a lot of these out of state folks, via email, a lot of times, that I can at least send them to this podcast, and they can, instead of again me repeating myself 15 times a week,
yep,
they can pretty much get the Reader's Digest version of why or why not to invest out of state. And it doesn't have to just be here. Out of state anywhere has its pros and cons. More cons than pros.
And it's probably a lot better, and it's probably more enjoyable to listen versus read at this point, because you can listen on the go. So it'd be great for any investors out there. And on your end, it's probably a lot easier to hit a share button than it is to constantly copy and paste and write and write. We're all so creatures of habit now. It's like easier the better. So. But that's why we tape these things. We tape these for you guys, and we tape these for your knowledge and to kind of just strengthen the knowledge that you have or add on to what you already have. Knowledge is power, guys. So, Alex, talk to us, my man.
Yeah, well, you and I were just chatting just before this, and we were, you asked me, maybe you didn't ask me, but it kind of came up somehow in conversation where, why do you think people are buying here or want to buy in Pittsburgh? I
asked if Pittsburgh was a stable market. That's why so many people were interested in it.
Very stable. It's very safe and inexpensive. It doesn't appreciate drastically, which is good and bad, right? Because we looked at something recently. You and I, we went on to the internet and pulled up Seattle, and we looked at the prices of homes. They're doubled in 6 or 7 years. Yep. It was insane. You can't. So, you can't sustain that. Right. It's impossible. Right. And what's going to happen is if you buy something, let's say year 5 when it's almost doubled in price, and then year 7 rolls around and it crashes, and now that property you paid $1 million for might be worth $800,000,
right?
Which 6 years ago was worth $500,000, but unfortunately you paid $800,000, and now you paid
$1 million.
You paid $1 million, now it's worth $800,000. Okay, that doesn't happen here. It's a lot more difficult to make those mistakes here than it is somewhere else.
The peaks and valleys are very they're more like speed bumps here than peaks and valleys.
Yeah, that's all they are, little speed bumps.
Speed bumps and a lot of potholes if you're familiar with Pittsburgh.
So not only that is it's just affordable. So I don't know all the areas of the country. There are probably other parts of the country that are maybe similar to Pittsburgh. I'm sure of that. But I know Pittsburgh, so that's what we're going to compare it to. So a lot of investors want to come here for one reason, is it's affordable. So a duplex that might cost you $1 million in Seattle or Los Angeles here is going to cost you $150,000 to $250,000. So you see the drastic difference. Mm-hmm. It can be 3, 4, 5 times, maybe even more, the price. So if you wanted to buy something to the average person who's making $100,000 a year, or even a couple making $100,000 combined, coming up with, to buy a $800,000 duplex, coming up with 20% down, which is $160,000 plus closing costs, is almost impossible, right, for the average person.
Right.
So where they can come here in Pittsburgh and buy that same quality duplex, and the rents are going to be less and all that, but the price is going to be $150,000. So instead of that couple having to come up with $160,000, they only have to come up with $30,000. So that's more palatable. So that's the pros of, that's the positive things about buying here in Pittsburgh. It's inexpensive, so the average person can afford to buy 1 or 2 or 3, where in their market they can't even afford to buy 1. And 2, you can still cash flow a little bit here, where from what I've understood in other markets, you're paying this $800,000 price tag for a duplex and you're not even cash flowing.
And can I ask a question in this? And you might get to this later on, so if I'm too early with this question, just let me know. But is it stay pretty stable here too because of, if you're investing to where it's a duplex, you know you're going to rent it out. You always, with all the colleges that we have here, all the universities, sports teams, the arts. It's Pittsburgh for a smaller mid-sized city. There's a lot to do here. Does that play into it too, or is it?
The only reason I think Pittsburgh is stable is there is no population growth here.
Okay.
So that's one reason. Like somebody was telling me recently about, I think it was in Louisiana. There was, I guess, had to do with gas and oil and a boom down there. So in that particular, and I might be totally wrong, but just to say it was somewhere in Louisiana, in that particular market, there was literally, I know who I talked to. Austin, Texas.
Okay. All right. Yeah.
He said there were, I think it was 300 people a day moving there, which is not. Yeah, that's what it was. It was 300 per day. That's $100,000 a year. Jesus, 100,000 people moving to Austin, Texas every year. That was the growing rate. That's not the case in Pittsburgh.
Right.
So in Austin, it's probably a lot easier to make. I shouldn't say easier. It's not easy in any market, but if you're buying there, it's
people are buying.
You can see what's going on. Right. It's expanding. So almost anything you buy is going to go up. Right. But it's not as easy as it sounds. But like Pittsburgh, that's not the case. The population here in Pittsburgh and Allegheny County has been pretty stable. Mm-hmm. In fact, I'll look it up online while you're we're talking and asking another question. But just to see what the difference in population growth between maybe 1970 and now is, and you'll see that it's virtually the same. So
that would be interesting. Yeah.
So how can? I guess prices could go up, and there's probably a reason for that. But the other thing why people come here is because there's some talk about like technology, right?
Yeah.
Like Google's here, so as soon as you say Google, you're like money. You're thinking I'm going to make lots of money.
People are printing money.
But and I'm looking on this website right now, and this is something from February 2018. So Google this is Amazon employs 60 people here. 60.
Amazon, because the rest of them are temps. They have more. At their warehouse, they have a lot more people working, but they're temporary through fill-ins through temp. Yes,
so
I understand.
But just because you say Amazon, Amazon has some sort of hub here or something.
But that doesn't mean
there's 60 jobs, folks.
Yep.
So that caused a certain area around where that Amazon headquarters to flourish.
Yeah, that's where my wife works.
Okay, but that's it. That didn't cause, had no, but it has an impact on the rest of the market because of that. Because of you're saying Amazon, right? Now Amazon we're in the 20 finalists for picking the next big hub for Amazon, right? And from what I understood, I don't think it's going to be here. But if that happened, right? So if that happens, they're saying that could be 50,000 jobs. Amazon.
Wow.
So 50,000 jobs it says cloud computing, advertising, e-commerce. If Amazon brings 50,000 jobs to Pittsburgh, can you imagine what that would cause? That would probably bring 200,000 jobs, you know, with restaurants and whatever.
Everything else attached to it, right?
Okay. So if that happens, Lord, this will be an insane market, but I don't think that's going to happen.
I don't think we're going to.
But you can see why just Amazon and Facebook, and I guess maybe eBay has some stuff. There's I know Uber has some.
There's a lot of people that have almost like little subspaces in Pittsburgh.
Yeah, but they're very small. I don't know what we're talking about. Maybe a few hundred jobs. I don't know.
Uber's would be even smaller, I think.
Yeah,
it's probably similar to what Amazon has with the small office type stuff.
So that's, as an out-of-state investor, that's why you have to be careful in sifting and sorting through all the information. Knowing that the population isn't growing, knowing that, there's some big names and big hitters here, but there's no real major impact because there's just not enough sheer numbers are low. So you have to be able to sift and sort through information, and in order to do that, the internet's only going to get you so much. You have to know people with their boots on the ground who know what they're doing here. So for someone out of state to have that contact is super difficult. Most agents don't even understand this. Mm-hmm. They don't just because you're a real estate agent doesn't mean you understand why these things happen behind the scenes. You really have no idea.
Right.
You're just doing what I do, and I still don't quite understand it fully, but I just know through experience what's happening values wise, and I see what happens when people are successful investing here, and I see what happens when they're not successful, so I have a reference point, so I can say I don't want to do that because that fails every time. That guy's really highly successful. I'm going to copy what he does. I'm going to use him as a mentor, so to speak.
That was going to be my next question. So how, and like we always say, it's all about networking and building partnerships and building up and stuff like that. Obviously, then you would recommend, at least touching base and having a contact in a certain city if you're, even interested.
Yeah, but it's so hard, man. I mean, it's because if I had to be a contact for everybody who wanted to invest here, I would not have time for that. That's why I do these podcasts, so hopefully I can help enough people.
Right.
Like, I love when I talk to somebody who's way more successful than I am, and I think, like, wow, how do you own that many units? Like, I own 500 units and did that in 20 years. I'm thinking, man, you're an animal. I don't know how you did that, because basically it fuels me. It kind of makes me feel inferior. I'm like, man, I only have like 100 units and whatever, but and then people look at me like, wow, you have 100 units, 100 plus units. I'm like, yeah, but it's all
relative, right?
It's
subjective.
Relative. I mean,
very subjective.
You could like we talked about having just 5 or 10 units, and you can set up yourself so you're financially independent in the future easily. Mm-hmm. You can do that. You don't have to be 100 units or 500 units. More money, more problems.
Right. Yeah.
More units. Just the money doesn't make you happy. So the pros of coming here to Pittsburgh are it's very affordable, and you can do a lot of damage with some money here because you can buy a lot. That is, and it's very stable. So your risk here is mitigated a lot just by being the market the way it is. So you're limited on how much you can lose based on that, just because of the way the market is.
That's big.
Period.
Yeah.
Now those are the only pros that I can think of. Now there's many cons, and the downside of buying here is, one, you can't read through the lines like I'm talking about here. You can't see the forest through the trees. You can't fully understand the market by what you read online and charts and graphs that you look at. There's only so much you can learn there. Finding the right contacts here is extremely highly critical. And in order to do that, you just be willing to pay these folks handsomely. Okay? Because finding a good contact who really has your best interests at heart and knows what they're doing and cares about you and can spend the time with you and truly help you is 1 in 1,000. And maybe that's even a high ratio. Okay. Secondly, you need to the downside of buying here is not having that person, not having your team. So you have to build that team. That team is usually there's one catalyst, one person. It might be myself. It might be an attorney. It might be a real estate agent. You hook up with that right person, and then you get access to their team. So someone who wants to work with me, they're going to have access to my accountant and my attorney and my advisors and people that I know. In the markets I don't know, I send an email to someone who I know truly understands that market. Like I got an email yesterday from an investor. He said, I got this place over in Katanning. It's just outside of Pittsburgh. I don't even know how to get to Katanning, but it's not that far. It's probably, I don't know how far up Katanning is.
I've been there, heard of it.
Maybe 45 minutes or something. But I don't know Katanning, and so I sent it to a friend of mine, and I said, what do you think about this? And then I don't waste a whole lot of time.
Right.
Because if you chase every lead, you could run out of time real fast. Right?
Chase it down to catch a nickel, miss a quarter.
Yeah, absolutely. So...
So we got, biggest thing is, one, you can't read through the lines. One of the biggest cons, what I'm hearing is not being able to read through the lines is just the intangibles that every market has. The small underlying things that unless you've lived there, been there, invested there, have a team there, and I'm sure every market's like this. This isn't just Pittsburgh is quite unique, but every market,
every market, unique, whether it's absolutely every market, you have your experts in that market who know it, and they can tell you where to and where not to invest. The question I get a lot too is where should I invest once I get to Pittsburgh? Where should I invest? What neighborhood? And I know we did some sort of podcast on this. My answer to that is it depends.
It's always
subjective. It really depends. Yeah. It depends what budget you have. What are you adverse to risk? Do you want to go ultra safe? Do you want to get a potential high return but potential high risk? There's so many variables.
So one thing that I'm hearing is that if you really do want to, and there is pros and cons to investing out of state, and especially investing here in Pittsburgh, but you absolutely want to have not only the game plan set out, but you want to have the plan set up and see it before you even think about it.
That's perfect. I couldn't have said that better. So let's back up and let's give these folks listening just A through Z.
Nice.
Okay, so number one, once you pick an area, I don't know how you're ever going to do that. It's between you and what area you pick, whether it's Cleveland or Pittsburgh, but whatever area you pick it and then go with it. Don't deviate from it. Just pick the area and dive in. And then number two, get to know as much as you can about that area. So you're constantly educating yourself on the area, the statistics, building your team, getting to know people who know this market. 3, get here and be here quite a bit if you can. Just don't rely on your advisors. You have to get here and see what you're buying. Okay? Until you build a really strong rapport with those people in your team, you really should rely on your eyes too.
Right.
So get here, get to know the area. 4, probably focus in on a certain area in Pittsburgh, right? So whether it's going to be within certain city limits or certain suburbs outside of Pittsburgh, certain price ranges, you need to focus. You can't be anywhere in Pittsburgh because you won't find a good deal because you're just scatterbrained.
Right.
You have to be focused. So hone in on a certain select areas that you want to invest your money. Then really get to know those areas. Okay, so once you delineate, I want to be in Pittsburgh, I'm building my team, I have some advisors, I want to be in these areas. These specific areas, get to know them like street by street. The better you know the area, the more focused you are on a specific area, the better chance you have of getting a good deal. And then 6 would be just pulling the trigger, having the financing in place, and then when the deal comes up, pull the trigger. Don't wait, you can't hesitate because you won't get a good deal if you hesitate because the good deals don't last.
Gotcha.
So the only homework you really have, if you follow those 6 steps, I'm sure there's some sub-steps inside of those, but the only homework you have to do is decide what area you want to invest in that's out of state.
And just really start to lean and learn. And that would be such a tough thing, to do too. Like you said, without really knowing the area, that's hard. It's difficult.
Yeah, and it's difficult not just knowing the area, but then that team to rely on. Contractors. Story after story where out-of-state investors hire the wrong management company. They have the wrong advisor. They have the wrong agent. They have the wrong contractor. So they gave them too much money down, and the contractor doesn't want to finish. And they kind of got you stuck over a barrel because, hey, if you don't send another $3,000, I'm not going to finish the job.
Right.
And you're not even here to manage it to see, are they doing the work they promised, and is the quality there? It's insane to think you can buy property here and manage it and have a team set up in a short period of time and get to know the market. It's virtually impossible.
It's a long-term plan,
what I guess one thing to look for that you can help mitigate risk is if you decide, okay, I live in New Jersey, I'm going to invest in Pittsburgh. If within 6 months you think you have your head fully wrapped around where to invest in Pittsburgh, and you think you have the right team in place, and you think you're ready to kick some butt here, take a step back, because 6 months is not enough time. I mean, unless you're living, eating, breathing here and just living here for 6 months. But if you're out of state and you're trying to do this, if you think you can do all this in 6 months and find a good deal, it's probably a sign for you to step back and reevaluate and just make sure first before you jump in. That's not enough time. All right, boss?
Boss man.
That's it, man.
That sounded like an excellent tutorial right there.
Good. I hope that's helpful. I mean, I hope that's really helpful to out-of-state folks. Even if you're not out of state, you can use a lot of that just for your framework of investing in Pittsburgh.
And that's why I wanted to bring up the offhand stuff with like the universities and the arts and sports and stuff like that here too. Just because, I think when you're out of state, you think those things might add to the luster of real estate, and oftentimes it doesn't, and I think it just that gives people a more realistic expectation. I like that you brought in the job market too. I think that was really important. We really hope you guys enjoyed this at home, where you're driving to, or however you're listening to us. Make sure you're checking us out on Apple Podcasts, Google Play Podcasts, Spreaker. We're basically type in Deacon Hoover Real Estate into any of your favorite podcasting services. You should find Alex Deacon, Real Estate Investing with Alex Deacon, and Alex Deacon's Property Management Series. You can also find Realtor Nation with Ian Hoover, who also is here at DHRE. He's Alex's great partner here, and he pumps out a lot of great podcasts too. So find us on Facebook, find us on Twitter at Deacon Hoover in both places. DHREA.com is the new look website. All of our listings are on there now. It's a much smoother look. It's a much easier view. Check it out. Guys, thank you so much for tuning into this one, and we will see you next time.